Buying a property is one of the biggest purchases you're going to make in your life. So you don't really want to make a mistake on it. So today we go through a few pieces of advice that I wish someone had given me before I bought my first home. All right, Nathan, number one, you don't necessarily need a 20% deposit. Is that true?
That's right. So there's so many different ways these days you can get into a home, and having a 20% deposit is a great start as you won't pay lender's mortgage insurance. However, if you're not quite there yet, there's still a number of ways you can get into the market. One way, we've talked about it in previous videos, Jaden, is through a guarantor, or if you have a family member that owns property, you can leverage the equity in their property to get into the market with minimal deposit, saving you thousands in lender's mortgage insurance, as well as getting you in today's market rather than waiting for the future when you've got that 20% deposit.
So you can get around deposit without that. But what's the minimum deposit you actually need? Like, I don't know, how much do you need?
The minimum is about 8% of the purchase price. So if you're buying at 500,000, that's 40 grand. So that gets you in the market today. Yes, there will be things like lender's mortgage insurance. However, consider it an opportunity cost. It gets you in the market today and it gets you locked in for that property based on today's value.
There are a couple other ways you can buy with no deposit. We've got another video on that, includes stuff on first homeowners grant, a couple of gifts, other ways of doing it, but there are ways of getting in without having a 20% deposit.
Number two, the banks are going to lend you massive amounts of money. So Jaden, why is this a pitfall to be careful of when getting your first home?
Well, you might have gone onto a bank's website, you might have spoken to a mortgage broker, you give them your income, your credit cards, and they spat out a crazy amount of money that banks will lend you. You can lend in some cases, I've seen people could lend millions of dollars. And it can really set you up for failure because while the banks can lend you that much money, it doesn't mean you should lend that much money. So I know when I started, I think they were gonna give me over $1 million to buy a place, which for a guy that's on one income, it's pretty scary. The fact is, you gotta spend time up front, do a budget, look at what your mortgage repayment's gonna be, not only today, but add 2 or 3% on them. Historic interest rates are around 7 to 8%, which is almost double where they are today. So it's worth factoring it in and making sure you can actually afford that before you take out that $1 million loan.
And not only that, Jaden, another good idea is do a practice session like a mortgage on training wheels. So if you're renting at the moment and you know you want to buy that property for $800,000 and your rough monthly repayments are $3,000 a month and you're only paying $2,000 in rent per month, we'll make up the difference. Make your repayments $3,000, $2,000 to the rent, $1,000 to savings, and see how you go.
It's an awesome tip. So just practice your mortgage repayment today. So number three is buying a place involves so many costs. Nathan, do you just need your bank deposit? That's it, right? I just need my 8% and I'm off to the races.
Yeah, so there are some small costs, but they do add up. One is your solicitor. So they can cost anywhere from $1,000 to $1,500 and they'll help you more with the settlement and stamp duty requirements. The other is your building and pests. So that's checking the properties up to speed. It doesn't have any structural damages or problems or pests. That's anywhere from $400 to $500.
And the third one, like Nathan mentioned, was stamp duty. So as a first home buyer, there are exemptions up to a certain price. For example, in Queensland, if you buy under $500,000, you don't pay stamp duty, but you pay transfer duty. So we've got a whole other video on that about first home buyers' mistakes and other costs that you can factor in there. There's actually 11 costs that can be involved when you're buying a place. So definitely check that one out.
Tip number 4, I've got my pre-approved, Jaden. So why is that not set in stone? My pre-approval is all sorted. I thought I can just go out there and buy the property I want.
This is a mistake we see all the time. So unfortunately, a pre-approval isn't a guarantee that the bank's going to approve your loan. Now, it's for a couple of reasons. Usually, different banks have different types of pre-approvals. So some banks will just do a credit check. They'll just do basically an automated computer pre-approval and then just say, yeah, you're away and going. And they won't actually look at your pay slips. They won't look at your situation. They won't look at other liabilities and credit cards, which means when they come back to actually do your loan, they'll decline you. The other reason we see there, Nathan, I'm sure you see it all the time, is the property.
That's right, and that is due to some circumstances that are unique to each lender and the property that they'll accept.
So specifically, it could be if you're buying a unit that's under 50 square meters, if you're buying a unit that's in a complex, or if you're buying near power lines. There's heaps of reasons there, but the fact is not all properties are loved by all banks. So you need to check out those 3 things and make sure that your pre-approval is actually approved before you start going out and making offers. Number 5, something I wish someone had told me, that I need to get insurance on the home. What?
Well, only if you're buying a house, and this is more specific to our Queensland buyers. If you're buying a house in Queensland, As per the contract to sale, you need to arrange the home to be insured from 5 p.m. on the next business day after the contract is dated. All that means is if the property burns down, it is your responsibility at that stage that you do have something in place. So
it's crazy. In other words, you can sign a contract to sell, you haven't got your finance approved, you haven't got your building and pest approved, and you're actually liable for the insurance on that property. So like Nathan said, go out there, make sure you know it, because I didn't know that, and I actually wasn't covered until it settled. Number 6, buying at auction is not the same. Nathan, what are the other conditions? What's with that?
Well, auction has no finance clause, it has no building and pest. You are unconditionally locked in to buy the property. So you want to make sure before you go to auction, you've checked the building and pest, done a report, and are satisfied with any issues arising to the property.
There's no backing out of the contract. Once you've signed it, once the hammer's fallen, it's yours. You're liable for that. They can actually sue you. They can take you to court by not settling, not completing that property. So if your finance isn't approved, if it doesn't go through, you've got to make sure you're covered. So again, be aware of the conditions at auction. They can be very different from buying private treaty or a normal purchase, and you just don't want to get caught out. And lastly, buying my first home, it felt like the rules were changing at every stage. You talk to the agent, they tell you one thing. You talk to a different agent, they tell you another. Nathan, what are some things to ask the real estate agent to get the truth? Because the fact is that you might go to a place and it says offers over 500. You go to put an offer down, they say, oh, it's actually 550. What do you do? How can you manage this?
I think firstly, it's about understanding the property before you go and check it out. So there's heaps of data online you can look. You've got on the house, you've got RP data. There's a lot of different software systems you can use to give you an indication as to what the property you're looking at might be worth. This will help. So when you're asking questions to the real estate agent, you already have a rough idea on what it might be.
You don't want to go in blind, which I did a couple of years ago, and there weren't the tools there. So again, you're just guided by the agent. If they say, well, that offer's not enough, they'll kind of artificially push you up. So one good tip there is to put your offer in writing. So if you're making it verbally, it's not binding, and they can go across that. So I know, Nathan, you go through that, you help people go through the contract, and that's obviously an important thing. And number 2 is use your terms. Remember that it's not always about price. You can change your finance terms, you can change your settlement terms, and sometimes that can be what gets your deal across the line. We've got a whole other video on that, so check out the steps in making an offer and also a video on researching the property market. But that's it for today. What do you guys think? Let us know, leave a comment below. Otherwise, if you've got any questions, make sure you hit us up at huntergalloway.com.au.